I'll pull over the risk disclaimer over here. So read that over. This is not financial advice. So read all that over just to make sure that there's real risk in this and you can lose real money. And I am not telling you to buy or sell anything. So I'm going to start off with a review of NASDAQ and Dow here specifically. Yes, I'll look at that too, but the reason why I have Dow in here is because we have SMT, which I will get into in a minute. So I'll work my way from the top down. Delete some of this out of here because that's not needed. My own annotations. So we have important levels on the daily chart I want to specify. I'll go over to Dow here as well. So this week, I'm going into it. I already was going into it with this mindset, but I suspect that it's probably not going to be a big, huge week. Do I think that there's a possibility that we could take the previous week's high out? Yes. And make new all-time highs? Yes, I do think that's possible. But I'm not keen on that. I would not be surprised if it just consolidated because we have a lot of wiggle room between all-time highs and where we're at right now. And we only have like 3 days left this week, so it doesn't mean that we're going to have a big range week, especially last week we had a huge week. So the next week, especially with it being the end of the month, I don't see why we would have a humongous week. So I would not be surprised if we chopped around this week. So daily levels right here, the blue is the fair value gap on the daily chart. And then I'll go back down to an hourly chart on both. And we'll get into this. So this right here, this candlestick's tail did not reach the consequent encroachment of this daily fair value gap. That tells me that this fair value gap is pretty strong and the algorithm is holding price out there. So I like that. And then we also came down and touched an old daily high. So the high so this old daily high on March 14th is this trend line right here. Now we also have a balanced price range. So we energetically went through this SIBI that was used to send price down to take out the sell side down here and trade into a daily fair value gap down here. So that's kind of important to me. So we went through it. Now it's balanced price range, and that to me, I'm trying to get better at that, but that more than likely is the reason why this gap stays open and why it stopped it right here instead of having it go all the way down to close it in. So go back to the hourly chart. Actually, first I'm going to look for. So right here, just took Friday's low out, and then we have a possible change in the state of delivery with this last down close candle. But it's too early. It's obviously midnight. London does not open up here until like 1 more hour, so I'm not expecting anything, but it does look like it's trying to set up. I mean, honestly, right now it could be a pre-market London setup right now, but I'm not interested in that because I'm going to be going to bed soon. But Just want to throw that one out there. So this is the change in the state of delivery, possibly, on the 4-hour after taking Friday's low out. So sell side has been taken. We immediately overlap this civvy with a BISI. So this to me is a balanced price range. Obviously this all can change overnight and the market can go the other direction, but that should be balanced. I'm going to remove that, so show that there. But what's really important to me is the fact that we have SMT right here. So we have low, 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 and then you'll notice NASDAQ over here to the right, or to the left here, is making a higher low. So we have a possible short-term change in the state of delivery of price. And I'm not trying to get all animated to the upside because my expectations are really small this week, but this 30-minute chart has a imbalance. And if you go to new week opening gap, oh, never mind, I thought that was there. That's annoying. I thought maybe that was another level up there, but no, it's not. So we have basically a clean buy-side liquidity pool resting just below this breakaway gap, which, I mean, maybe it is. This candle trade into it. Yeah, this is a breakaway gap. So there is no buy-side delivery offered into this imbalance. So the market needs to come up here and redeliver and offer buy-side into this imbalance. So right now I'm going into that expectation for London. I think it possibly pay out, but it's too early for me to tell. I'm not 100% certain. I need to see a little bit more animation. I need time to be on my side. But I do believe that we could run up in here, and obviously if it takes out this imbalance right here, then I'm probably more leaning towards this being a potential draw and maybe going below this low, but I have to wait for more information because we could just get an SMT in this 1 hour imbalance and then the market then resumes going higher. But if you take a look at Dow over here, this is a daily volume imbalance right here. Between these two candles, you have that, and then you also have the fair value gap. So you have those two levels. And what do you know? You have a high resting just below that, so there's going to be trailed stop losses being brought down there for anyone that was able to participate in this movement. Lower on Dow, they're either chasing it lower or they're trying to capture it, moving it lower, and it's going to come back if they trail their stop loss too much. It's going to come back and knock them out so they can't participate in lower movements. But I'm not suggesting that we're going to go lower from here. I'm just thinking that mindset is that people want to trail their stop loss down. So that to me is a reason for the market to go up there. And we also have an inefficiency. So we have a sell side imbalance right up here that's lacking buy side delivery. So obviously we're in a discount. So when we go from a discount, we can then move into a premium. So that's another reason why I do believe that we could go higher. Go over to ES here. Micro ES. Yeah. Actually, I don't have. Okay, so ES. It's like building up this trend line liquidity, just kind of funny. But also, ES is stronger, making that higher low right here. Pair of the lows, Dow's lower, S&P's higher. And we have a potential breaker. Forming. Usually, sometimes I like to just use the bodies on these, but just go down to a different time frame. Maybe it'll be a little cleaner. Yeah, I like that a little bit better, but it's what it is. So I would say that this imbalance has been redelivered with buy side, and it's proving that it's a balanced price range by resuming higher. And this is a little bit too clean for me. And obviously, this inefficiency has been lacking buy side to a certain point. So it offered buy side up to about an institutional order flow entry deal right here. Didn't even go halfway. So it offered that, and that was used to send us into this daily level. I do believe that if you dig a little bit deeper on this, so 59321. No, just a little bit. I mean, it's still an institutional order flow entry deal on a daily chart. Big old 4-hour SIBI here. You can actually refine that. Didn't quite reach the consequent encroachment, so that just means that price is really, really bullish. If I were to tap it, it would still be bullish as long as it repelled away from it. But the fact that it's not even reaching it tells me that it's supporting price. And then 3-hour, I don't really like that. So ain't gonna really get much better than that. It's just a matter of watching price deliver. I mean, you're not always gonna get, the true midpoint of the fair value gap, because price is just really bullish. So it just says, screw you, I ain't giving you that. But I personally believe that if we can be bullish and treat this as an inversion fair value gap, I believe we could go up here and take out all-time highs again. But my whole bias this week is really, really slim. Like, I'm not expecting a lot of movement. It's just I don't have the experience yet. I mean, after years and years, I would look at this and be like, we're going to take this all out. We're going to go to all-time highs again. Do I believe that's going to happen? Yeah, but I don't know. I have to wait and see. But ultimately speaking, the buy side resting above here, buy side right here, and that's all she wrote. I mean, we just got to get through this fair value gap. And if we do get through that, then I'm going to be monitoring a run up into here. And then let's say it's Wednesday and we're showing a willingness to be above this, then yeah, I'm leaning towards the fact that we're probably going to hit new highs. Dow probably not going to be strong enough to reach up there because Dow literally exploded last week. And we also have a balanced price range. So this is possibly trapped longs. So they're trapped. And I just think that Dow will probably be a little bit weaker because it just doesn't move as strong. We do have a lot of buy side resting above here, but Dow is just a granny. It just doesn't want to move like that. So this also could set up a potential SMT in here for next month, because next month I'm watching to see if we get a potential sell side delivery and price. So we get a market maker sell model into this fair value gap on the monthly chart. And if you take and look at ES on a continuous contract, not the June, you'll see that there's actually a breaker over here from all-time highs from a couple years ago. And that's just another setup that could pan out. And we also have all this liquidity, like all these lows just resting with a monthly fair value gap breaker. So potentially we could see a sell scenario set up for S&P and get ourselves a little, 20-day IPTA look back target, which would be basically last month's low, and then get an SMT with NQ to then resume going higher. Obviously that all changes if we go through the fair value gap. So overall, that's my bias going into tomorrow and the later half of next month. But I can be wrong, and we just keep going higher. So that's all I got. So I hope you guys enjoyed that one, and